All right, this is the weekly analysis, October 1st. Go ahead, Slim.
Okay, I'm getting ready to pull it up now. Sorry, I just sat down at the desk. All right. I'm getting ready to share my screen now. All right, these are the, let's go back to this one that matters. All right, guys. So here is the order blocks from last week. Let me hide this so it doesn't throw anybody off real quick. So what you see here are the order blocks from last week and the ones that played out. I heard Todd mention earlier about the GDP and how it moved and all that stuff. I calculated the number of pips. If you were savvy enough, it was like a total of 4,000 pips that we could have got on for the weekly order blocks that we saw. AC, as you see, it did as projected. It moved 131 pips. AN the same. It didn't tap into the order block or the wick. That kind of goes back to what Kim and Todd just mentioned about, you know, looking at the trend and where the order block is going. But in this particular one, it didn't. So depending on your trading plan, your trading style, how you manage to tap into this, you could have made some pips. I know last Sunday, because I made notes on the call as well, the AUD pairs were not one of the preferred pairs to trade last week, but they did have some movement. Chef JPY, depending on, like I said, your trade management style, your entry, your stop loss, your TP, you could have gotten 300 pips, and it could have been more because you could have got at least 200 pips if you traded the retracement, and then 300 pips based on what the order block was doing. Euro Chef, another one, did as projected. It did sell, but it ended weekly. I mean, as a bullish order block, which means depending on where you had your TP. If not, it would have sold back up on you. So bought back up on you. So just depending on where you had your TP. Sorry about that. Y'all know I say that all the time. Possible 272 pips. Euro JPY, it also ended the week bullish. So trade management, if you manage it correctly, you could have gotten 497 pips. Excuse me, y'all, I have something in my throat. GA, of course, the GBB pairs are the ones that had all of the crazy news this week. And I think it came out the box kicking Sunday night. It was 1,000 pips, depending on if you were able to catch them and how you manage your trade. But it was 1,000 pip movement just on GA alone. GC, same, GBP news, 900 pips. GN, same thing, 790 pips. NZD CAD did as projected. It didn't tap into the wick or the auto block, but depending on how you trade, you still could have picked up 189 pips for the week off the weekly OB. And silver did as projected. I know if Monk is still on, I know Monk capitalized on silver. And I may have that pip conversion wrong because a part of me think it was like 800 and some pips, but for some reason mine was only showing 92. So I don't know if that has something to do with the settings, but I thought
that's 92 pips, but it's 92 points, but it's 920 pips.
Okay. All right, cool. So thanks, Todd, for showing that. So it was a lot of pips that was available to us. The biggest ones, of course, came from GA, GC, and GM. But like Todd always tells us, we only really need those 70 pips. So I don't know. And I'll speak for me on what he was talking about earlier. Chef JPY is what I chose to trade this week, and I didn't manage well. And so I just didn't manage to trade well. So I did not come out with these 300 pips. So yeah, that's the summary for last week. So I hope everybody was able to have a successful trading week. Any thoughts on that before I show this week's? Questions, concerns, thoughts?
Well, what I think, Selena, is I know we said or on there you have something about those GBP pairs did not do it. I disagree with that. I think that what was the direct?
No, I said, huh?
It says didn't do its projected news affected cut outcome.
Okay, let me go back. Let me take this off. Hold on, so I can see what the heck I was doing. Hold on. Hold on. Hold on. Okay. When I said they didn't do as projected, they if I'm not mistaken, they bought first, right? So
they sold first.
Okay, so that's an error then.
Yeah, so if you go if you pull up the GN or any of the charts, any G chart that you see, it dropped a crazy amount of pips Sunday, and then they intervened. And if I had known that they were going to buy it the way up, I'd have been rich. But I didn't know, so I was slow on the trigger as well. You still there, Selena?
Yeah, I'm pulling up my chart. You can't see my screen?
No, well, we see the Excel spreadsheet.
Oh, okay, hold on, sorry. I'm on it with the. All right, can you see it now?
Dankeschön.
Okay.
So if you look at that, if you go to the daily, you can see the parabolic move. So that's Friday, Thursday, Wednesday, Tuesday, Monday. So Monday, which is really Sunday night, you'll see that big drop. That's where you get that hammer candle. That was Monday night. Look how far it went down. Now, if you put your ruler at the bottom of that, you could have caught. It's 800 and some pips that day. So
833.
Yeah, that was on Sunday night or whatever. But if you took that trade back to the top side, how many pips is that? 1,300. GN is like 1,700.
1480.
So yeah, it did go down like we expected it, but then they intervened and it came back up. So there's no way that you could have taken that trade and not made money going to the downside. $70 pips easy. 500 pips easy.
Yep. That's for sure.
All right. Any questions over any of that? All right. I need to screen real fast. I need to. Yeah. All right. We new month, right? New month, new me.
Yep. And I marked up the monthly order blocks too.
Which one?
Hmm.
Which one is a monthly?
There are quite a few, sir. There is AC, AF, AJ, Cat Chef, Euro Chef.
Hold on. Let's talk about AJ. Let me see AJ. I don't know why this thing is tripping today.
Mm.
All right. This is, it used to be Monk's favorite pair.
It's still my favorite pair.
No, Monk, you're actually fired from this pair because you
No,
traded
I'm not.
you traded silver. All right. All righty. So this looks like this will be a down month for this joint. We said we was gonna trade one of these pair. I don't like this order block on this thing.
Yeah, we said we was gonna trade a monthly this month.
All right, what's another one?
Another one is AC, AF, Cat Chef, maybe.
AUD, CAD.
Mm-hmm.
I like this one a little better. A little better. You say Cat Chef?
Yes, sir.
Ooh. Think that's too much. All right, what else?
Euro Chef.
I like this one. All right, write this one down. We'll trade this one.
Cat Chef.
Euro Chef.
I'm sorry. I got my other screen up. So you can let me know so I can tell you the next one. Okay, GA and GN.
Those are going up.
Yep, bullish order blocks.
GBP NZD showed out the last 2 days, yeah. Those of y'all who couldn't find a pair to trade, that's 940 2 days. 2 days, 940 pips.
The sickness of it all.
Anyway, that's good.
Did you look at GA too?
Yeah, I like GA. I don't necessarily like GN. I like GN to sell or sell back down a little bit.
Okay.
We traveled a whole bunch of pips last week. All right, we'll start with GN for the weekly joint. All right, GN is a bullish this week. You know, I think that's 1,800 pips. How many pips? That's 1,000 pips. But if you look at this total move for GN from last week, from when they had that intervention, 1,700 pips. All right. It moved 1,700 pips straight up. It got to come, it got to retrace, y'all. It doesn't have a wick, or the wick is very small on this thing. But I'm personally going to be looking for an easy money retracement from this joker. Oh, I see that little wick, y'all. There's a little wick on it. Alicia, you see this? Is Alicia on this? I thought I saw it on there. If this trade right here come through, man.
This is going to be your easy money strategy, as
This-
well as a
My all money is.
bullish order block.
I know. This be my all money is strategy right here, boy. You just need one of these trades right here. Okay, so there's an order block here. There's an order block here. I mean, there are several areas within this golden zone that that price can come. I'll worry about that 700 pips down the road if it turns around and sells. But I think that it's a safe bet to expect these GBP pairs to sell. So you have it's a bullish order block, but I mean, it's a lot of pips that it has to cover. I think it needs to sell down before it buys back up. So even if we don't get this parabolic move back down to the golden zone, if you just look at this chart from a support and resistance standpoint, I at least want this retracement to come back to this area, y'all. Or Felicia and my chalk traders. We break down, we break up. Really, this should come back down to this area and buy back up. So I'm looking for this trade to push back down first before going back up. I know for those of y'all who want to ask me, when am I getting in this trade? I would tell you TBD, baby, TBD, to be determined. All right, there's an imbalance here. It's sitting in an order block right here. What order block is this? $12 maybe. So if it breaks this order block, this 12-hour order block, there's a weekly imbalance right above it. So I really don't anticipate it going all the way up there, y'all, because it's like another 192 pips. But, you know, if it does, this would be my next area I would look. Any questions on this?
Yeah, is a breaking structure going back down like on the 15-minute? Is that a part of the indicator or?
For me, it is. I think everybody has, all right. Everybody has to have entry criteria in order to get into a trade. That doesn't change. Whatever your entry criteria is, you know, whether that's on the 15-minute, the 1 hour, the 4 hour, it needs to be your entry criteria. But you definitely have to have some entry criteria before you enter a trade. And if yours is to break structure, you know, on the 15-minute, then once it breaks structure going down on the 15-minute, then you know, it retests that level, you should be good to get in that trade. For me, that's what I'll need to see. Yeah. Looks like we're double topping here on this 15-minute. So if we break this area and it goes back and retests, I'm in the trade. Simple as that. Easy money, baby. Easy money.
Which area you talking about breaking?
Yeah, the low right here. See this low, this red candle?
Yeah.
If I break that area and goes back up and hit a retest, I can take my trade going south. For you or somebody else, they might have to break this low right here. You might need to come down and break this low and go back up and retest. You know, I mean, there's not a wrong answer. It's your answer, you know, and you need to see that every time. So on the 1 hour, this is your low it needs to break. If you're waiting for the 1 hour break, you need to break below that low. You want to see it retest, then you want to see a push down. It doesn't matter what your answer is, but you know, that needs to be your trading requirement that you see every time. It shouldn't change from week to week or from trade to trade. That's how you get inconsistency. Any questions? All righty. GA, y'all, GA. All right, GA in a lot of ways is similar to what we just talked about with GN. You know, the great thing about these trades are you got the bullish order blocks on the weekly and you got a bullish order block on the monthly, right? Look for it to push down. Same sort of scenario. Once it starts going up though, we're going up. These are the trades that Sean should trade. Sean should get, and once it starts going up, Sean should just leave his buy trade in all month. You're trading your personal little loots. You want a long-term trade? These are great long-term trades.
That would be sweet. Then if you get another one, you can stack, but you don't have to stack as much because it's a monthly trade.
I can't even get y'all to stack a 4-hour trade. But you talking about stacking a monthly.
I don't know who you talking about because we stack in these streets.
Don't you start that each today.
Little Kim to the rescue. Little Kim, I can get your
Thank you, Kim.
stack. Nothing. Only thing they stack is them L's. You know what I'm saying?
Now that hurt.
Not-
That hurt.
this-
That hurt a
this-
little bit.
Not this week, no.
Let's get it this week.
And not next week either.
All right, this is the zone for this this joint. Listen, y'all, if this stuff falls like tomorrow or Monday and y'all don't take these trades, man, I might throw this computer at y'all. Because this is significant pippage, right? This thing pushes down these 600, 700 pips and y'all don't win. I might ban you from the call for a couple of weeks because these are easy pips. So again, this is basically the same scenario. Yes, Selena, I'm speaking directly to you, your son, your friends, and your friends' friends. Alicia, Prince.
I knew it. I knew it.
Everybody on that swing chat is come. Tasha, oh yeah, Terrence, especially Terrence. Terrence,
I'm on it, coach. I'm on it.
but Terrence, if the trade doesn't go down immediately, you ain't got to hit me up and ask me what's moving. Patience, the patience. We want to exercise good patience this week.
Hey, I was patient all week till Friday about 12 o'clock.
No, you weren't patient till Friday. Did you trade GJ?
He about to tell on himself. That's what he about to do.
Oh my God.
Trade GJ win.
Well, I mean, at any point that night that Selena came to your house, that she was supposed to get up and trade, that she didn't get up and trade.
Nah, we missed all them pips.
Hey, Terrence be hit me up all week about trades. Then whenever the trade moved, he MIA. You can't raise him. Well, I'll send the smoke signals down there. Selena told me she was going to your house.
I
Hey,
don't remember us saying we were getting on
What time y'all
doing
getting on
trade
Zoom?
that night. So
Yeah,
I don't know.
I sent a text message and everybody was drooling. Y'all off the chain, boy. Sean said he was up. He answered the text, and I asked Sean the next morning if he had put a trade in. He like, nope. Can't make it up. Can't make it up.
But you were up, Sean.
I was up for about 10 minutes. I went to bed. I wasn't gonna stay up straining to lose money.
If he had just bought GJ and went to sleep, he'd have woke up to an explosion. All right. Here's another and a sister and a brother. Basically, just all these G pairs. I don't want to keep saying the same stuff, but going up. Man, this
I'm
goes.
gonna lose money. I'd rather do it and be awake and comfortable.
Come to think about it, I don't know what I was thinking about Thursday night. I was waiting all week.
I don't either.
I stayed up too late. I should have went to bed when you went to bed about 9 o'clock.
Terrence, she was looking at US 30, remember? You was looking for that US 30 move.
Did you sell US 30 Friday?
Nah,
Can't make it up, man. You can't make it up. Y'all, we knew it was gonna sell till we said that on the call. Kim made $650,000 on that sale.
Oh, 650,000.
Sean, you could have got in for the buy. You said you didn't take your profit on the buy.
Oh,
Sean,
oh,
you could have closed the buyout and then let the sale.
and we were on the call together. So I don't know why he
Yeah,
did.
you ought to see
that.
Sean's face right now, like trying to come up with.
I know.
It didn't explode to the other side. Sean said he's giving me the what if snap. Oh my God. All right. But look, y'all,
I ain't never been so happy to take a $40 loss in my life.
hey man, when these trades pan out, man, we just have to be there to execute the trade. We want to see this push down. Even if it doesn't get all the way down to our zone, there's a huge imbalance here. We just have to be cognizant of all these stopping points. There's a order block right above our zone. There's another order block that Kim doesn't believe in right here, but and there's another block right here in our zone. So we're going to have a bunch of opportunities to trade, I believe, these British pound pairs that need to come back to earth from all that good intervention that happened to them last week. That's GBP CAD, GBP Chef is the same exact thing. I'm not even going to cover it, but same thing. You get the weekly order block. Any questions over the G pairs?
did they actually raise the interest rate? What was the intervention?
No, they intervene. It's called intervention.
What's the difference between intervention and the interest rate raise?
You raise the interest rate to do it the right way. When you intervene, you buy your own currency. Kind of like them businesses was doing all during 2020, puffing up their own books. They get that government free money and they buy their own stock. And now they wondering why these stock prices is crashing back to earth. Because you didn't get the money to the right folks. Get the money to the folks, the people with the money wouldn't have spent their money on the businesses. And they would have been valuable for real, instead of the CEOs buying their own stocks. All right, these euros. I'm so tired of hearing Kramer and them cry. About to sell off. How deep is it gonna go?
Very deep.
It's gonna cut deep.
You're cutting it. Cutting it.
The euro trying to give you about 290 pips, 270 pips. I can't really see. That thing is way down there.
You're cutting it now.
You know, you're gonna take these trades to the upside. I mean, you might as well collect the 277 pips to the downside first, before it pushes back up to the north, baby. That would be a good retest of this same area. I would definitely look for this sell first. Any questions? Any questions? Any questions?
I have a question.
Sure.
I wanted to stay just like to see like how you guys like talk, like like discuss like the weekly updates and stuff. But like they use like different terminology like before, so I'm kind of confused. So let's start from the beginning. What is a pip?
Okay. A PIP is a percentage point increase, right? A percentage increase.
Okay.
So when you see these prices or this price move, right? The pips is the percentage points that's moving. Every tick is one pip. So
Okay. All right.
you have this ruler and price goes from here up to here. You see,
Right.
you see what that ruler says?
Yeah.
474. That's 470.
Yeah.
And that's what we get paid by. The lot size, I'll go over
Oh.
all this with you on a one-on-one, but the lot size determines how much money you get paid per pip. So you can
Okay.
get paid 10 cent a pip, you can get paid 30 cent a pip, you can get paid $3 a pip, you can get paid $1 a pip, $10 a pip. And so when we were talking earlier about being greedy, pumping up your lot size, that's what we mean. So if just because we anticipate this selling down here and then buying back up, it doesn't mean we should be greedy and jack our lot size up so we can make $1 million going down and then $2 million going up, right? Because there's always a chance that it might start going down and then go up, right? So you always want to be conservative when you take your trades, because a bunch
Okay.
of
Thank you.
conservative wins equals a massive win at the end. All right, but EA, this is what I think should happen. I think it should push down to the zone, then push up, going back to the north, shorty. So if you look at about where you think price is going to go, if you're a pattern trader, which I'm not, you see where the top of this W is, right? I think we will end up pushing up eventually to this order block. But you're always going to have your little take profits on the side. So you can drop down in time frames, look for imbalances and order blocks on this leg that need to be filled as this price pushes up. Is there any questions on this move? All right. DC, same exact setup. We want to see it pull back first before pushing further to the north.
That swing low down there.
But right here,
Yeah.
yeah. All I'm gonna do is throw a fib on this candle right here. Hopefully there's a wick at the top. Yeah, there is a little wick. I don't want to hear Selena's mouth if it wasn't a wick, y'all.
Hey, why you ain't start down at the red one, bottom of the red one?
Because I'm interested in this week. I'm fibbing the weekly move.
Got you.
Because I want to know where the pullback is from the weekly move.
Oh, I understand. You're not fibbing the swing lows return to the 78.6.
No, all that should have already happened, like probably right here.
Right there, yeah.
I'm really only interested in what happened last week. We need to pull back from the action of last week.
Wait a minute, did you just fill a candle with no wick? You know,
No.
I'm taking
No,
a
that's what he was saying. It's a wig. Yeah, it's a
Uh,
wig. That's why he said it, because you know I was watching. It best be wigs in
Let me
these
put my
streets.
glasses. Let me put my glasses on.
Hey,
Hold
hey, go get 2 pair, Pim. Go get 2 pair of glasses. One for you and Selena.
on.
I'm trying to help y'all achieve greatness. They said it couldn't be done. Well, I'm here to prove you wrong. 200 and some pips right there, Selena.
I'm here for it.
I don't know if you are. Let me get rid of all these drawings. Okay, so all these are massive stops, like the stop loss. So it's going to require you to do a little bit of like homework for yourself. If the price bounces off this order block, obviously your stop loss would be beneath this order block. If it comes all the way down to this order block, then obviously your stop loss will be beneath this order block, okay? In my example here, I included the entire zone, which is going to encompass everything in that zone. So if you want to refine your entries, you know, when price gets down here, once you see the rejection and you get a break and a retest on your time period that you're trading, then you can feel free to modify the area that you need to protect for the push up. Everybody understand that?
Yeah.
But if you just look at these markups, even this one with this fat order block, I want you to pay attention to this real fast. If you are a rudimentary trader and you were lazy and you didn't want to do any work, you know, and price hit this area and started turning and going up, and you enter your trade at this position. This is a 1 to 3, 3.48. So if you get 3 positions in here, right? What's 3 times 3.48? 3 times 3.48. That's 10.44% when price hits your take profit. That's without refining, without getting a lower time frame entry. That's just off this weekly candle. So you can see that there's opportunity, you know, to go on a lower time frame, get you a better entry. You don't even have to take it all the way to the top. You can just take it, you know, a few pips, like my 70 pips, and you're gonna make your pip count, or you're gonna make your percentage based on your positions in that trade. You having multiple positions in that trade. Any questions on EuroCAD? Okay, we did EA, we did EU, we did GA, we did GC. Euro Chef is going to be the same as the rest of those Euro pair. In this case, the golden zone is lower than I have this position tool. I don't want to confuse y'all, so I'm gonna move the position tool. this is still offering $123 pips down before it pushes up. All right, I have Euro GBP, even though it's not quite a weekly order block. I think it is still going to sell. It's at an order block. I'm not going to trade this trash, but if you're going to trade it, I would look for it to pull back first before it pushes down. It just doesn't have the same pip count. So to me, it's kind of a waste of time. Let me look at gold. I don't think gold has a weekly order block though. No, it doesn't.
Check the monthly. I didn't check the monthly this one.
No. As long as the dollar is rising, gold should continue to drop. But if I were y'all, I would stick to the weekly order blocks. I don't know why you would trade something outside of all the success. But I mean, if you do, I mean, everybody has to trade.
No, the only reason I said monthly is because we talked about doing a monthly one. That's all.
Right, but I'm just speaking in general.
Okay.
There are a lot of things you can trade, but what I'm trying to do is help you see the light. I'm being very candid here. We've had a great deal of success trading these order blocks. I can't tell you what to trade. Everybody's an individual, but if you've not had success, you might want to get on the boat with us. If you had success, then all the respect and power to you. But as for me, if it don't have the weekly order block, it ain't gonna get my attention. I mean, that's just where I am as a trader right now. I need ROI, baby, and I'm not getting it, or I'm getting it the way I get it, from these weekly OBs, and I'm trying to help you get it too by looking at these weekly OBs. Pay attention to the weekly OBs. I'm going to briefly talk about these indices, even though it's not really set up, and I'm going to tell you kind of what I think and what I anticipate, because I know a lot of y'all have love for these jokers. All right, so if you look at this order block right here, that's where price currently is, right? There are two options here. It can push through and go down to this order block, or it can bounce. And if it bounces, I expect it to push back up, maybe to this order block, retest this level before it falls down. If y'all can go back and look for our Zoom that we had at the first of the year, I think we talked about the indices dropping, right? So if you look at where we were in January, you got this serious drop. So if you would have just paid attention in January and hopped in for a sale in January and didn't do anything else, right now you'd be up $5,000, one position, right? You got into the top of the move in January. $5,500. So this doesn't require like rocket science. It just requires us to be patient, and it requires us to take what we see and trade what we see. In this case, it's bearish order block after bearish order block. You get a bullish order block, it retraces to your moving average, and now it's pushing down. I don't know how far to push down before it retraces back up to the moving average, but these indices are going to drop, guys, until they stop raising interest rates. And hopefully you already know that. But if you don't know that, you heard it first from me. These indices are going to drop until they stop raising interest rates. So if you're buying indices, I want you to ask yourself why when they're dropping. Trade with the trend. You know, even if you have a bad entry, you're going to get paid eventually. You know, just be a little bit patient. A lot of us just don't have the patience. There are a lot of moves that are happening right now, like the dollar's just going up and everything against the dollar is going down. Those are basic moves that you can have in your toolkits, you know, going forward. If you look at where the US 30 is, the US 30 is at a level, I want to say it's a weekly. Okay, is at this level. One or two choices. We can get a bounce right here, all right, and go back up at least to this order block, or we can push through into this weekly order block here and get a bounce up. But we're going to find out very quickly which one we're going to get. If it bounces, there's the first place I would check where there's an order block right here. There's an order block right in this area. It's on the lower time frame, maybe the daily or 12-hour. But then you have a huge imbalance from here to here. Right? This is like 2,000 pips if it goes back up to that imbalance. 2,000 points. $17.57 to close this amount to the top of the imbalance. And then 2,000 pips about to the bottom of that order block. So just understand that whatever you're trading, you just have to wait for the setup to present itself, right? So if you're trading this 4-hour chart, all you gotta do is pay attention to the levels. First move is gonna be to the top of this level, right? It's either gonna break here or it's gonna come back down. If it breaks, then you have to wait for it to test this level, right? You see where this stop is? Wait for it to test that level. It's either gonna break through it or it'll reject. But you're just gonna trade from level to level. If you're not comfortable with doing that, then you need to, I guess, trade a smaller time frame or find some other system that works for you. On the way up, it's always good to identify where your imbalances are. You know, like this huge imbalance, we know it needs to get filled. There's another imbalance before you get up here that needs to be filled. So once you can identify that stuff on a chart, you have a better idea of where you're possibly, you know, taking the trade to the top side too, right? But always look up, you know, to your next available time frame, and that'll keep you on the right side of the 8 ball. It'll keep you from getting your clock clean, you know, as the market makers take the pool of money off the table. You guys have any questions over anything we discussed on the analysis? And if you ask me what I'm trading, it's going to be something with a G in it. I'm looking for it to sell. I want a hard sell from the British pound. If I don't get that, I will definitely take a sell from Lowe's Euro pair. All right. The Euro pair offered me 200 some pips. I don't need 200 pips. I need 70 pips. So I'm catching the first thing smoking is going south, either off the Euro or the British pound. I would prefer to take a British pound pair because it's a lot more lucrative. It has a lot more running to do. But if I don't get that year, the British pound sell off tomorrow night or Monday, then I'm definitely looking at the Euro for the sale first.
10-4. How far you think the US 30 gonna drop?
Well, I mean, I don't know, but we know it's
Well-
going to drop until they finish raising interest rates. So, you know,
We already at pre-pandemic.
no. We're
We're at the top of the V-shaped recovery, sir. We're in the V-shaped recovery.
this is the pre-pandemic high we're at,
Right.
right? But you got to think, man, like these highs are based on zero interest rates.
Pre-pandemic highs?
Yeah, we ain't had no interest rates since what? 2008?
Oh, I thought they cut the interest
Oh,
rates
okay.
to fight the pandemic.
I think you gotta look at the 2008, the 2008 highs, maybe.
Yeah, I believe so too. And,
Yeah,
and
real interest rates.
this is like the 2007. So I would say 2007. These highs right here. Realistically, I think that and I don't know if it's going to fall this hard, but remember, Sean, I was telling you 17,000. I thought eventually. This is prior to the interest rate. But if you think about this is how I always view it. The Fed, I said at the beginning of the year, I think we need to have a 6% interest rate. The Fed is now saying what, 5%, Sean? 4.5%?
I don't know what they're saying.
I think they're saying 4.5%. They want to get it to 4.5%. I think that's restrictive territory for them. The interest rate is what, 3.25 right now?
Yeah,
So to get a whole 100 points higher, I can see us going down to 25, 25,000 at least. You know, if you think we had a 75-point rate hike and we fell, how many points did we fall this week? Well, the last 2 weeks. The last 2 weeks we fell 2,000 points. So we will at least fall probably another 3,000 points. I think we're going to at least get to this level right here. Now, if they keep the interest rates there, then we might bounce. But if we keep seeing need to raise the interest rates, we're just going to get lower and lower. So it really doesn't matter where I think the market is going. It just matters that we're selling. As long as we see rates hike, we have to sell. I just get my information from these old order blocks, right? So that's why I had this level marked off, because I knew it was going to come and at least test this level. There's an order block right below it. We're going to raise, I think, 2 more times. We have 2 more times to raise the interest rates. I think November and December. And I think we're going to raise both of those times. So I do see at least a 3,000 point drop going into Christmas. I don't think there's any way around it. I listened to a lot of the talking heads on TV, and Apple's earnings are way down. So,
Can you pull up monthly?
I just think that we have more pain ahead, before we see any significant rebound. I think we're definitely getting to this level, which is 26.7. But I would not be surprised for it to push down to 20K. It wouldn't shock me at all. that's if the Fed, if the Fed stays and maintains the course. We haven't even had a recession yet, guys. Like there's not been, like, jobs haven't really started laying people off. Nothing has made the system buckle. We still have a very strong labor market, all that good stuff. Now we know it's coming, and that's going to tumble the stock market too. But right now, the only thing that's tumbling the stock market is the Fed.
You think that's because they already targeting when they're gonna start cutting them again?
No, I don't think that's not how it works. I don't think, the impression I get is you keep raising interest rates until it breaks.
I know, but you remember what was it, July? They started putting out articles saying they're gonna start.
I know that's what these experts are saying. But here's what we all have to understand. This has never been done before. Like, this is trial and error. And what the Fed is telling you is the Fed, what Powell is trying to avoid is most people on this call were too young to remember what happened in the 70s and 80s, right? You either were too young or you weren't alive. But at some point, the Fed had to raise interest rates, and they raised them and they dropped them too fast, and it created what they call stagflation. So they want to avoid stagflation. Stagflation, it makes stuff ugly for a long time. What were the interest rates back then, Sean? Like in the teens?
Yep.
Yeah, so you don't want to have, you complaining now. You have a 13% interest rate, but it's really going to get stuff ugly. So I know we don't really understand finance the same way that the experts do, but the best way to look at this is when you raise these interest rates, you can't just raise them for a little bit. You got to put the fire out. So you have to break it and understand that it is officially broke before you start lowering the interest rates. And that's what the Fed is trying to do, right? People are going to get hurt by this. They understand that. Businesses are going to get hurt by this. Right now, ain't no businesses hurt. You have a lot of people complaining, but you haven't had businesses close and get consumed, by this. Y'all are old enough to remember the .coms, right?
Nope, they're not.
Are y'all serious?
2008, y'all remember?
Probably not.
No.
Well, back in those days, there was a lot of .coms. A lot of people were creating GoDaddy.com, this .com, that .com, and only a few companies survived that. Like the AOL and Yahoo and Google. But there were a million different .coms. Eventually AOL got swallowed up too. So
Well, they emerged. But
same difference. There's going to be some, like, that has to happen to the companies these days the same way. It's the same things are going to happen, and we haven't seen it. So it's coming. Nobody should be alarmed that it's coming because the Fed is saying that. They're telling us that. And I just think that the people don't really believe them. They don't believe the Fed is going to actually break the economy. Any questions?
No
Save.
preguntas.
Save your money.
So we're gonna do EuroChef as the monthly, right?
Sure. Well, let's create a $3,000 demo. If you
Okay.
can. You're gonna do this monthly challenge. I just want to see if we can run it up. Run
Me
that.
too. Only thing that's sticking in my head when you told us about that 0.02 lot size.
You saw it. It was a 0.25.
Right.
The 0.02 is a point.
Yeah, and it was like 13K.
It's 15K.
Okay.
The opposite is going to be true when they start lowering rates again. The opposite is going to be true.
Instead of this fall, whenever they lower the rates again, it'll be like this. But everybody on this call will have experience trading these markets. So most of us on this call have experience trading at some point during this pandemic, right? Most of us. Just like if you look at this is the pandemic, this is March 2020. Like, just imagine if we was trading, we would have all been rich. This 2020 would have made us rich. And now we'd just be selling everything, getting rich, going down. So this, what you're going through right now is experience, right? This is zero interest rate. The market went straight up. As they start raising interest rate, you see the market is going straight down. So if you know nothing else, even if you're screwing your trades up, at least you have the experience of understanding when the Fed raises interest rates, you can expect to see the market fall. It's not because I'm telling you this, it's because you're looking at this chart. When there's zero interest rates, you can see the market is going up. As a matter of fact, from 2009, right? Because this is where the housing market crashed, the housing bubble, and they dropped them interest rates to zero. The market went straight up. The pandemic pushed it down a little bit, but it's still straight up. So this is what we need to understand and put that in our toolkit, because like we all understand on this call that the Fed is going to have to lower the interest rates. Even if they don't lower them to zero, they're going to lower the interest rates because they're telling you they're raising the interest rates to break the economy. When you break the economy, the only way you can help it recover is to lower the cost of borrowing. All right, they're going to break the economy, and they're not going to lower the interest rates immediately. They said they're going to stay there for a while. We don't know what a while is. We'll have to see. We'll learn what a while is together. Maybe it's 3 months. Maybe it's 6 months. Maybe it's a year. I don't know. But everybody on this call should understand what's going on. They're going to break the economy. Once it's broken, they're going to leave it broken for a couple of months. That's to prevent stagflation. And then once they lower the interest rates, we should see this. We should be a part of this, you know? Everybody understand that?
Yeah.
Cool. All righty. I'm going to go ahead and end this recording because that's all that is to the